Why is it so important to be doing what you're doing today? Incorporating AI, particularly in the way that you're incorporating it. Why should they be thinking seriously about that? If for the last 100 years or however long they've been so successful doing it traditional way, if you like.
Maybe I'll say something that's not as intuitive as maybe, you'd think me to say. There is no immediate, complete answer, in my opinion. It is not going to change tomorrow. But what I do think, the compounded effect of where AI is today over the next 5 years is going to change meaningfully how you create an alpha. Okay, so any individual tool out there is not going to make you think you're losing. Okay, if it's just a market trend tool, if it's just a software, if it's some sort of app you did in generative AI, any individual one of those is not going to help you to see that. I don't think anybody's going to have this smoking gun. This is it. It is a combination of all of those things that is changing how you do things.
Hi, Adam Gower here, founder of GowerCrowd.com and host of this podcast series, AI in Real Estate. Welcome to today's episode. My guest today is Adir Levitas, who is founder and CEO of Faropoint. Now, Faropoint are a small bay industrial investor, but they are of very significant size, over 3 billion of AUM currently, scattered across the United States. Now, today's podcast is required listening for any sponsors out there wondering how to actually implement AI into their systems and where the future is going. Adir's platform is candidly unique. It is extraordinary. In the extent to which it has adopted AI in a way that builds the pipeline but actually in a way that is completely integral across the entire organization. This is what I've been talking about for at least the last 9 to 12 months. This is the future of real estate. So for both sponsors and actually investors, and there unfortunately is no current opportunity for accredited investors or retail investors with anything less than $1 million to invest. With Faropoint, what you hear today is exactly what you want to be looking for in the sponsors that you invest with, right? It is a totally new form of due diligence, right? That's what you're getting today. It's one of the most interesting conversations I have had for a very long time. Please subscribe to my newsletter at GowerCrowd.com. I will post a detailed summary of what Adir and I talk about today on the website there, and I will also distribute it through my newsletter. Right, so subscribe at GowerCrowd.com and you will find in the show notes over there, you'll find a detailed description of our conversation today, as well as hearing about it and other shows actually via the newsletter. Okay, let's move on. Adir Levitas, who is founder and CEO of Faropoint. Oh my goodness me, coming right up. Adir, it's what a pleasure to meet you. I've been looking forward to talking to you. You actually operate in a very interesting asset class and space. So I'm looking forward to learning about that. But why don't you tell me something about how you started? You've been telling me a little bit about it before we got going. How did you start? What is the core of your business?
Adam, thank you for having me. Well, the core of our business is buying urban warehouses, small bay. They give it a bunch of different names in the industry these days. Basically small warehouses in the US, strictly in the US. I actually started my career, I want to say, 2012. So it's been 14 years. I started by buying homes, single family homes in Tennessee and Georgia out of foreclosure or short sales, fixing them up and selling them. So That's basically how I got along when I was a student it's called Reichman University in Herzliya in Israel. And I was just doing it for fun. My mom said, you should be a lawyer or a doctor because my brother's a doctor. It's a very typical Jewish mom. And I said, okay, I'll be a lawyer. I don't want to be a doctor because she's a doctor, and my father's a doctor, and my brother's a doctor. I said, I'll be a lawyer. I didn't like it. So I said, you know what? I'm going to start doing something cool. I was studying, and then every month I would go to the States, buy homes, flip them, make a couple bucks. And at one point I'm like, okay, if I'm not actually going to be a lawyer, I'm just going to finish school here. Maybe I should make this a business. And then at one point, I started Faropoint, and the mission was we went into commercial real estate, and slowly we were listening to our investors, and they said, you guys should look into industrial. And so it was really kind of, I want to say, just random, listening to what people want and trying to give them that with a lot of passion to do something. I guess I was always a bit too, I was very jumpy. I always wanted to do something, learn something new. School was extremely boring for me. University was boring for me. And so that's how we eventually rolled into it. But when we wanted to go all in and become institutional, we had to set our path and do, create a strategy that makes sense over the long term. But basically, that's how it started.
So how did you identify? Okay, so let's be really clear on what your asset class is now. Small bay industrial between 20 and 100,000 square feet, right? Just to give me some numbers so that viewers and listeners understand your scale today. And then I've got a follow-up question.
Okay, so to understand our scale, I guess the first thing is that there are 300,000 warehouses in the U.S. under the logistics, industrial, whatever title it is. About 75% of them, call it like 225,000 out of that, would be between 20 and 100. So the vast majority of warehouses is actually smaller than 100,000 square feet, right? The thing is that the value of it is about 50-50 versus the rest. So 50% of the universe is below 100,000, 50% of the value of the universe is above. The reason there are more of those below is because they're smaller, so they cost less. And so it is a very inefficient market, but there's a lot of warehouses. They're not as costly as the big guys, as the big ones. And then you need to find your way through. In terms of our company, our scale is about, we have about 3 billion equity under management. And, some of it is equity that's not called yet. So we usually operate in about a 50% leverage. We have a lot of attention towards exactly what numbers make what. But in general, we're a 50% levered strategy. So 3 billion gets you to, call it like 6 billion worth of property once it's called.
And how many square feet is that, Adir?
So it's about 30 million square feet, and it's about 750 tenants, and it's about 550 buildings.
Okay, so my follow-up question is, I did mention to you that I've done some investing in much larger scale industrial warehouse, like 1 million square feet now. Isn't there a significant management burden when you're dealing with presumably what is a diverse, geographically spread 550 building portfolio? How do you deal with that?
Yes, I think there's a few challenges in creating scale within urban warehouses or anything below 100,000. One of the challenges is that you need the same skills for an asset manager or a property manager or property accounting as if you were doing 1 million square footers. And so it is a game of precision, efficiency, processes. All of that has to be in place to allow a GP like us to actually make money. And so we are tasked with being extremely efficient to make our business work. And there has been quite a few years that we had to carry forward the business to the next year without really making enough money to break even because we didn't have enough scale. So one of the moats we have is actually the fact we're able to survive that first decade and create a sizable and continuing to grow efficient organization. But you're right. If we have one asset manager that is dealing with, call it 30 tenants, and each tenant is 30 million square feet, that's 1 million square feet per asset manager. But if that asset manager had 10 million square footers, that's 10 million square foot. And that's the same amount of phone calls, same amount of time. And the skills you would need for the asset manager we would be having is probably much more diverse than somebody having 10 Amazons for 10 years. Because the type of guy we would need to hire or girl would be what is the, they would have to talk with diverse tenants and business owners and problem solving. And there's a lot more that goes into it.
Mm. How are you actually financed on the equity side?
So we basically, so it's a good question. If you think about a business, every step of the way needs to be very efficient for it to work. We need to have a very efficient financing schedule, acquisition pipeline. We use AI and we developed our own software to actually do that. And so every layer of what we do needs to be extremely efficient for this to work. When it comes to the financing, we have a set of different instruments. We have what they call a credit facility, which is an unsecured facility that is, basically the first stop of every property. Every property we buy goes into that pool. It gets, and then we check what's the, it's almost like checking its health. What are you today? Are you a value add property? Great. Okay, you're going to stay here for a couple of years until we get that sorted out. Okay, what are you? Are you a mature property ready with 10-year cash flow? Okay, we're going to put you in a permanent financing phase. So if you're ready for the next phase, you go on to it. If not, you stay in that credit facility until we get we try to materialize that business plan. And so you have, 500 million credit facility, and then we take 100 million, 200 million chunks into the graduation phase. Could be a life company for matured assets, bank's balance sheet for mature assets, a single asset, single borrower, what they call SASB or CMBS market. Right. And so we put everything into that first phase. We then take those assets that make sense. We put them in a tailor-made financing for their need. So that is how we basically create that efficiency. And the banks that support us are, anyone from the top 50 banks, and it's a mix of match of best pricing.
And what about equity? You're on, correct me if I'm wrong, Fund 4, I think, right? $1 billion this time. And it's already been seeded, hasn't it? So how is the equity structured?
Okay, so our equity is usually about a third. These days, it is about a third in the US. It's about a third in Europe, and about a third split between the Middle East and Canada. And when I say investors, I mean today it's like 90% institutional investors. So it would be public pension funds, insurance companies, sovereign wealth funds. And so it's a good mix of that. We did start the business with a lot of our original backers were Israeli institutions. And then over the years, a lot of my job was to diversify that and create more of global presence when it comes to LPs.
And no smaller scale, right? We just talked about that, but no opportunity for smaller scale investors to participate.
Yeah, I think over the years...
But that's how you started, though, isn't it?
Exactly. I mean, I know exactly what that means to raise any $25,000 and $50,000, and I have the utmost respect for any investor trying to do those things. I have been there, and I remember walking in the park with my wife today, and I would be like, hey, Mika, can you use your fingers, and I'm going to start telling you which investors are coming in. Put this guy for 50, put that lady for 25. We got 275,000. We're going to buy a deal, and we've come a long way since then. We still have a good amount of investors we work with that are individual, but I think that usually the minimum threshold is $1 million.
Right.
We're probably an average for family offices or individual of about $5 million.
All right. So I tell you what, let's pivot actually to your integration or use of AI. This is very interesting to me. And I know you've actually developed a couple of proprietary platforms, haven't you? Can you talk about those? Tell me about those platforms that you've developed.
Yeah. So I have personally, I always liked technology. Even when I was in high school, I guess I did a lot of that. But when I went into law and business, I was not a tech person. And I think over the past, I want to say now 7 years, I've come to the conclusion that I don't see how real estate is not going to follow fintech or insurtech or some of those other industries that are getting more digital. And so about 7 years ago, I've started the tech department in Faropoint, and nobody knew what I'm doing because we started a 20 people team and spent millions of dollars annually when it wasn't clear for me exactly what that is going to deliver. And I didn't have any of my own background to do that. And so we've learned really over those years where the value could be had with technology. And I think in the past year, it's been exploding in terms of its effectiveness and ROI, and I'll talk about it more. And so the first thing that we've done when it comes to technology, about 6 years ago, we have created our own acquisition pipeline software. The goal was the following. It is hard to acquire $1 billion of assets annually, which is where we are on average. That is about 100 to 120 assets. That is 2 properties per week. That is a property every other business day. To do that efficiently with the ability to choose the right ones, you need to have a platform that is probably very robust, and you see all of that data coming in at the same time. Previously, you'd had that coming into people's emails. And if that person leaves or if there's a follow-up question or somebody misses an email, it's done. So the first thing we did was said, you know what, let's create a platform where we ask the brokers to send those deals directly to the platform or upload it themselves into it. And so we don't need to chase them. And over time, the broker said, you know what, Fairpoint is going to be a real buyer. They actually buy multiple properties of us. We will take the time to learn the platform and basically help grow their origination platform. Over the years, we are today in a situation where 65% of the entire Fairpoint product, what we would be buying in our markets in the US, which is most of the US, is flowing through our platform. That is a crazy statement. That means that we have sort of a Bloomberg screen into most of the product when it's trying to be sold in real time. What's nice about it is not all of it is being sold. So you can see the bid-ask spread of stuff that was sold or wasn't sold. You can see cap rates between markets. You can see relative value. You can see if portfolios are doing better than individual assets. We work with close to 1,000 brokers nationally, and those that are not uploading it directly to the platform are able to just send an email to the platform, and then an LLM takes it and puts it in as a deal. And so our coverage ratio, meaning stuff that actually is being sold, and what part of that stuff goes through our pipeline, that coverage ratio is about 65% of what's happening. And that's been probably one of 2 parts that makes our secret sauce, which is we see what's out there. And if you see what's out there, you're able to pick and choose what fits you best. And if there are any inefficiencies, you're able to make that, you're able to take a benefit of that. That was the first phase of why we use technology. And then over the next years, we said, okay, that's great. What now? And so with all of that data we accumulated, AI was becoming interesting. And the first introduction that I had with AI was machine learning, classic machine learning. And we said, you know what, if we have so much data about those assets, the sellers, the tenants, maybe the first use case is you give me an address and I'll tell you what is the market rent. And so I was very motivated, and it was fun for me personally to get into machine learning. I love working with data scientists. I know, my mom says I like math when I was 4 years old, so I still like math. And what we created is basically the REXy suite of AI. REXy tells you what is the market rent for any suite in any industrial property in the US with a precision, with accuracy that is usually better than humans. And that is similar to the concept that they have in Zillow, the Zestimate for single-family homes. It's similar to what we have, the concept of REXy for rent. Today, we also have REXy for renewal. What is the probability of a tenant to renew? We have a REXy for sale, which is less accurate than the others. So many things go into a sale, but it still gives a lot of indications and flags, like what is the sale number that something's going to go for. And then we have REXy for the near-term market rent. What will a market rent grow? What would be the growth in a specific market or submarket over the next 2 years. So that is our like underwriting suite of AI tools that's mostly machine learning based. AI has really pushed that as well in terms of the architecture that's available to use. And that was the second introduction to AI. The third introduction came with LLMs and generative AI. And what that did, it really created a uptick in the amount of software we create. And so from having one software for pipeline, we now have a software that encompasses all of the acquisition process and due diligence and underwriting models. And then we have another software for asset management and, looking at the portfolio and integrating with our emails. And that's what we call asset management intelligence platform. And we have another one from finance. So anyway, we're writing thousands of codes of line. And so with software costs really collapsing, the ability to use your own methodologies to adapt, to create a software that's going to mirror how you do things day to day and scale that is here today. And the most interesting thing that I've found with generative AI, the ability to create your own software, is that the people that write the front end of those software today, you would never know, but a lot of them are investment people. And so we have a guy, a great leader, Yanai Gordon, he's leading our market in Florida. He's actually the one that wrote the front end for the asset management intelligence platform. And another guy, Mike Tang, wrote it for our acquisition platform. And so great people that have business context, if you give them, if they have a little bit of sense of technology, they are now 5xing their output. It's amazing to see that. And our tech people are supporting them. They create the backend, they connect it to data, they give them the tools, the security. And so I found that my tech team has collapsed as a silo and is now immersed into the investment team and the finance team. And that's what is so interesting to me. And so we used to have like a silo tech team, and they would do their own thing. They'll come back with a few features after a quarter. That's done. There's no more of that. Those barriers are off. We have investment team and tech team working together on projects.
That actually is brilliant what you just described. And I'm going to ask you a question that I think the answer to is no. But first, let me just kind of drill down on what you just described. Mm-hmm. Something that I see a lot is I see a lot of AI forward startups, for want of a better term, that are founded and run by people who have little or no real estate experience. And so they imagine what it is that real estate pros actually need. So there's this group over here, right, who are, and I see their platforms and they're just lacking. It's hard to describe what. It doesn't quite work. It's not quite what you want. It's interesting, but isn't there. And then you've got all these brilliant real estate professionals who are still using ChatGPT like Google search. And they've not moved, they have this hesitation about adopting it, this fear of it changing, or, there's resistance. There's resistance. By bringing them together in the way that you have, that is the absolute ideal structure for it. So I understand that you've got a tech team on one side. That's also incredibly interesting because now you've got that support, right? It kind of gives your real estate pros internally the confidence to move forwards because they've got somebody helping them. But how did you move these two guys that you mentioned? I'm sorry, I forgot their names, but the guy in Florida and the other guy, right? How did you move them from no tech ability to deriving the confidence that they could sit down and actually, well, not write code, but build the front end exactly the way that they wanted? What was the process behind that?
Well, I would love to tell you that I had this brilliant plan of how to get that. And I think the truth is that as a company, from a cultural perspective, we've always tried to embrace change, and specifically on the tech front. I was not raised in the traditional real estate universe. And so I somehow, I stumbled upon it. And so I, always was looking for people. When we hired, we were looking for people that are looking to not accept the stage we are in today as a permanent stage. I'm a disruptor. I'm looking for disruptors and people that can think outside the box. And sometimes, we make mistakes and lose money, and sometimes it's great. And so when I think about we take it, for example, Yanai and Mike, what made those two great individuals, build those platforms, I think they were always passionate about tech, but they never had the tools or the background to do anything about it. And what AI did, it says, hey, you can actually talk to Cloud Code and it's going to build something. And that was like a huge moment in their life and other people in our company, in the industry, like, you know what, I can actually do it. And then I think what also happened is that I took over the management of the tech team. And so our traditional silo didn't work anymore. And I thought, okay, it is up to me to lead by example. And I think that is the challenge our industry faces. Great people with great track record did not grow up with tech. And so their neural pathways are done a certain way. And they're like, oh, I'm going to bring an AI person and they're going to do AI. No, that is going to be good for creating a tool. If you want your company to really survive and lead in this next decade, it has to come from the top. The top people in the organization have to change their day-to-day, change their schedule. They have to learn. They have to change the podcast they're listening to, whatever information they are taking. They need to start thinking, how do I change what I've been doing up until now and do it differently? And I found this to be the hardest thing for people to do. If they're doing something for 20 years, it's hard for them to change that. And so anyway, when I took over the tech team, and again, I was never a CTO, I was like, this is probably going to be bad for 6 months, but I'm going to force myself to learn this. And I forced myself to understand, what is the architecture data scientists are doing? What is the backend? When they say backend, what does that mean? When they say DevOps, what is DevOps? What are you guys talking about? And so I had to go into it. And then while breaking the barriers, I said, one thing we're going to do, we're going to take a data scientist that is working on REXy, and we're going to take a business person that leads our Northeast, Itai, and Ilya on the data science. They're going to be a team. And not only that we're going to measure them on the success they do on other projects, we're going to measure them on the goals of what is REXy's accuracy in 6 months. This is a mutual project. And now data science and business, the speed of feedback, the speed of iteration is huge. The alternative is for that data scientist to do something in the lab and then in 6 months say, hey, is that good for you guys? Well, it's actually not what we intended. And so breaking those barriers, creating shared goals, and empowering people to use Claude and ChatGPT or whatever it is to try it. I did not know that Yanai or great other people we have in the organization are going to build software on their own. I did not know that. They started to do it on the weekends. And it was so cool to them that they can be creators. And that made a huge shift. And by the way, that shift came with a huge shift in how we think about data and why our data should be right. And one more thing about that, what we do today to allow people to actually play with real data and not to create any security concerns, we have created the Faromaker. Faropoint Maker is basically a tool that's based on Cloud Code, but with the Faropoint security that is connected to the Faropoint data. Our leased database, our data, our softwares, any data that we're buying, anything that that we have, it is connected to it. What we call the brain. And so the Faromaker is created to the brain, and now any employees can go on the Faromaker and say, I want to create a tool. I have investors coming in. I want to take them around Miami. Create to me a tool with properties that are 5 mile radius from one another, 3 hours drive. And give me a one-pager and every business plan, and boom, they have it going on. It's an app. Now they have an app they can share with the investors coming in. They know where we're going. Took a minute versus a day.
Wow. Okay. I'm going to ask some dumb questions. Actually, this is not a dumb question, but I do have a dumb one. How do your lenders and investors view this? What is their reaction?
Well, I'm happy to say it's changed. And in 2018 to 2024, when we did that, it was like, oh, nice to talk about REXy, nice to talk about our pipeline software. But I used to get those comments about like, hey, don't talk too much about it. It's like there was days where Zillow was doing a lot of iBuying and that didn't work well. And then people were like, oh, stay away from AI in real estate. This was probably a year where you didn't want to talk about AI in real estate. And so we had to not talk about it too much. We just used it because it made sense for us. And then in the past year and a half, even less, it's become, oh, we want to talk about your AI. And our investors are saying, it's cool. We want to get our data science team to talk to you. We want to have our broader private markets team talk to you. And I find myself in Texas and New York and Canada and having meetings with the same investors, but actually their data team and data science team and software team, because they want to see how we're integrating what we're doing. It is finally interesting to people more than just an anecdote. It is interesting because they need to select GPs that in the next decade are going to be the right GPs. They're going to be ahead of the pack. And so I think whatever worked in the past 30 years, it's probably not going to be the same formula in the next 10 years. And so to your question, the reception today is much more of curiosity. And not only curiosity, it is almost like a due diligence point that you need to show why you are built for this change. And I got to tell you, a lot of us out there are not there yet.
This is 100% what I've been talking about for the last at least 9 to 12 months. And actually meeting somebody who is as advanced as you are in this is a real pleasure. Is anyone else doing this, as far as you're aware? This level of sophistication, blending, let's call it the business with the tech side, without imposing somehow very efficiently in the way that you are doing?
I don't know of anyone's doing that. I think, when I invite you, Adam, to our office in Hoboken, New Jersey, you can even see in the sitting how it is merged. No investment department. Research, we have 2 research people that actually one of them is a very sophisticated research people, Joe Carpenter. He came from PwC, and he said, listen, for the past 10 years, I've mastered Excel. And he says, well, none of that is relevant today.
Right.
But he can do the work of 7 research people. And so him and his teammate, Tyler, they are creating research pieces for our investment team, or integrating. One of the things they do, they basically integrate and deploy REXy to the teams and educate the teams on how to use it and collect feedback. It is amazing how research, from being here's a report, do something with it, to I'm actually going to help you make decisions on an asset that you're bringing to committee. You want to understand better the vacancy in the submarket? Great, we have all of this access now. It's so easy to understand that. You want to understand your comp set better. You want to see supply coming in better. If you have the right data is not the problem. The problem is cleaning it up and creating the tools to actually give value out of it, and having people that are not afraid of learning something new every day. There's one thing I'll tell you about that, is the ability to learn something new every day and not have a fear of missing out, that you don't know anything and it's going to be too hard. And so either you live it alone, or you do something crazy. You just need to constantly learn. But to your question, I'm not aware of an industrial company in our space that is doing that. But it's a matter of time. And I'm not delusional thinking that this is the state of it, right? The only thing that's constant is the change, and the pace of change has just gone really faster.
Yeah, you and I think very, very similarly. Okay, so I do have a dumb question. And here's see, I knew that we would run out of time. You asked me how long, and I just knew that there was going to be so much more I wanted to ask you. So I'm going to ask a couple of questions as we start to wrap up. First of all, okay, so here's the dumb question. And I want you to speak to the sponsors in the audience who are listening, right, and hearing what you're saying, and who have been doing the same thing. You use the term 20 years, but 20, 30 years, multiple generations in some case, right? I mean, they're running big shops, and they've inherited from their grandfathers and their fathers, etc. Why is it so important to be doing what you're doing today? Incorporating AI, particularly in the way that you're incorporating it. Why should they be thinking seriously about that? If for the last 100 years or however long they've been so successful doing it traditional way, if you like.
Well, I think it's a really good question because maybe I'll say something that's not as intuitive as maybe you'd think me to say. There is no immediate, complete answer, in my opinion. It is not going to change tomorrow. But what I do think, the compounded effect of where AI is today over the next 5 years is going to change meaningfully how you create an alpha. Okay, so any individual tool out there is not going to make you think you're losing. Okay, if it's just a market trend tool, if it's just a software, if it's some sort of app you did in generative AI, any individual one of those is not going to help you to see that. I don't think anybody's going to have this smoking gun. This is it. It is a combination of all of those things that is changing how you do things. I'll give you an example. What we call it the AIP, which is the Acquisition Intelligence Platform. That is an app we're rolling out now. That app is basically the ability to go through the entire acquisition process at Faropoint from start to finish on the same platform. It has the pipeline that is going into it automatically through emails that brokers are sending. We have a credit app that it has the ability to digest financials, stuff in the internet, and give you an equivalent credit score for a tenant without any credit information. It has an underwriting module built in. It has a due diligence agent that allows you to pass through documents, understand the bottom lines, maybe create a credit request. And it has the ability to eventually create an IC memo. All of that process in one platform.
Does it do the TIs as well?
It would send the construction manager to evaluate the TIs.
Okay.
But if you think about that first step, you're like, okay, you're consolidating everything into one platform. That is cool. I don't see why this is going to be a difference. Well, if this is now in one tool, in one space, all of that process from A to Z is in one app, can I have an agent maybe run a lot of that? If I have an agent that's able to do the DD and the credit report and the underwriting and the IC memo, maybe I can now use the same 2, 3, 4 people to do 10 times the work. That is more important, like sourcing origination, like looking at the risks in anything. Maybe I can get better credit requests if I actually understand the footnotes of the engineering report or the environmental. You think about all of those things together, you're creating a much better, a much higher quality, more scalability of the same team. So as a GP, you could have less OPEX. You could be more scalable. You're integrating those machine learning models. So, one of the things we tell investors is that we need to do 2 things better over time to win your trust. One is lease better, and the other one is buy better. To show we can lease better and buy better, we use our own tools, right? How can you know you're leasing better than others? Well, here's the AI benchmark that we have created of where is the market. Think about it. If you have a market of what you can lease things to, if you lease above that market, that's your alpha. So to summarize that, if you have a platform that you can have agents do a lot of work and you can get a lot more done in a shorter period of time, that agent reads footnotes and so it doesn't miss anything like humans. You have people actually doing the stuff that humans are good at, judgment, critical thinking, sales, empathy, all of that stuff. And then you're integrating machine learning to show, look, what I'm doing is actually better than the market. Others don't even know where the market is because maybe they're lacking the AI tools to say that, or they're lacking the data to base that on. And so over time, you're going to do better. Do I think better means 10% more IRR on every fund? No. But if you do 250 basis points higher than the others over time, that is enough to be outstanding.
Okay. I'm going to ask you one last question. because I do want to chat before you have your hard stop. Um, To what extent, and by the way, I've actually got a whole list of like 1,000 other questions based on what you just said, but I'm just going to narrow it down for the purpose of this call, or this podcast. Okay, so you consume around 65% of the entire market for small bay industrial across the United States. So you could put it into this machine that moves it through. To what extent, and this is actually something that I've been working on and I actually managed to burn through all of my tokens. And I have higher, whatever, I pay the full whack and I'm still able to burn through it doing this research. So I'm interested to know what your view is on the impact of AI, particularly on your asset class, in two ways. One is obviously the data center investment across the United States and the intersection between that, this is my thesis, with the impact on employment patterns as a result of AI. Are you thinking in those terms as far as where you actually decide to invest?
So when we think about the future risks that AI may bring, right? It's not only efficiencies, there's also risks that come with that.
Mm-hmm.
I think one of the things that guide us the most is what is the reason a warehouse is in a certain location, and are those reasons good for the long term? One of the best reasons you can have a warehouse somewhere is probably proximity to rooftops, density. And so a lot of our urban warehouse thesis is around the density we're surrounded by, the household income or 20 minutes drive, or all of those things are critical to our business. We map every property in the US, every one of that 225,000 properties. We map the rent, the quality of that property, and all sorts of other things. And when somebody comes to committee, they show where's that property they want us to buy is stacked against the submarket and against the overall market. Because we need to understand if there is going to be a challenge, are we going to be the first property to deal with that challenge or the last ones? That is more of a defensive mechanism, right? But I identify, let's say, 3 AI threats in our industry. One of them is autonomous vehicles. The other one is has to do with robotics and inside warehouses. And the third one is probably more like M&A, because some companies are going to have better access than not. And what does that mean to industrial? When it comes to autonomous vehicles, I think there is what you're going to see is that a truck could do more. And so if a truck can go more, can drive more, that means that if you have a facility in the middle of the country, maybe you don't need it. Maybe a truck can skip it. But if your facility is a last mile facility to deliver to 1 million people in a 20 minutes drive, that has nothing to do with that, right? So it is still the case that when I get a package to my home, it is a 24/7 service with different people. But when somebody has to ride from Chicago to LA, then they need to stop somewhere in the middle, and nobody's replacing them. They need somewhere to park. And so I think autonomous vehicles is a challenge, probably more challenge for global supply chain architecture versus urban logistics. When it comes to robotics, that's going to create more efficiency in warehouse, more vertical stacking. Great. You look at last mile, most of our tenants are not stacking because the stuff is in and out quickly. And so they don't need that as much. However, some of them will need it. We're now in the process of a Fortune 500 company that they have signed a lease in one of our properties, and they've asked us to raise the roof for the first time. So we are raising the roof from 16 clear to 32 clear height because they cannot find a better location for the distribution of their product. And so we're going to see some of that too. So that is a risk. It is, I think, could be mitigated in really good locations. Again, that is the location, proximity to density. And the third thing about M&As, one of the things that I look at is diversification. Are tenants base diversified? Can an assembly tenant or a manufacturing tenant or a distribution, 3PL, global logistics, can they use the same facility? If their facility could be used for all of those uses, then that is the best diversification you have from a single event in a single industry that may be changing due to tech, and vice versa. Maybe there are new uses that come in. So anyway, we don't know the answers of what that can happen. So the best thing we can do is to rely on what will likely not change. I think it was Bezos that was asking, what in your business is probably not going to change in the next 10 years? Bet on that. That is the fact that you have 1 million people on 20 minutes drive and more people coming in, and there's no supply and building new land. That's probably not changing.
Dear Levitas, despite having another 100 and 200 questions that I'd like to ask you and I'd like to talk to you for hours, founder and CEO of Faropoint, thank you so much for joining me on the podcast today.
Adam, thank you for having me.
All right, that was Adir Levitas, who is founder and CEO of Faropoint. You just heard the future, right? That sounds a bit hypey, doesn't it? But it is absolutely, I'm absolutely convinced that what Faropoint has done, what Adir has done at Faropoint, is how you will see all real estate companies, I don't care what asset class, he talks about 10 years. If it's not within the next 3 to 5 years, I'd be surprised, which is exactly why you need to be looking for sponsors today who are at least moving along this pathway. Why? Because they're going to be buying assets today that have 3 to 5 year life cycles. They need to be ahead of the curve. You need to be ahead of the curve. Investors, like I said earlier, this is a due diligence item for your checklist when you decide who to invest with and what kinds of companies to invest with. Adir, what a pleasure talking to you. Thanks so much for joining me today. Oh my goodness. As you can probably tell, I'm a big fan of what you're doing, and I look forward to further conversations with you. And of course, to you too, viewers and listeners, thanks for tuning in. It's pretty impressive, isn't it, what you see here? It's just nice occasionally to really see how the future is evolving today. And what we got from Adir today at Faropoint is exactly that topic. Right. If you have not already connected with me on LinkedIn, please connect with me on LinkedIn. I write about exactly this kind of topic, actually, and this type of thinking extensively on LinkedIn and in my newsletter. So go ahead and connect with me on LinkedIn. It's always interesting to hear other people's points of view and to see comments and to engage in intelligent conversation. LinkedIn's actually a great venue for that. All right. So connect with me over there. I'm easy enough to find. All right. That's it for today's episode. Thank you again, Adir, and thank you also, dear viewers and listeners, for joining me. Until next time, it's Adam Gower signing off.